Caesar. The idols of March are come. Soothsayer, A. Caesars, but not gone. Julius Caesar, Act 3, Scene 1. William Shakespeare arch 1544 BC, the day marked for debt settlement in Roman Empire became a day associated with the assassin. Nation of Julius Caesar, the wheel of time seems to have turned full circle as recent cracks in the annals of US bank rapidly proliferated in bloodbath of European banks this week. The closure of Silvergate, Silicon Valley Bank SVB, and a signature bank has been unpredictably brought together. Capitol Hill US Federal Bank and Federal Deposit Insurance Corporation, that is FDIC, guaranteeing the deposit MAs. The rout has forced the Swiss Nation Bank SNB to assure emergency liquidity measures. While the precise reason behind the sudden crash of the banks will take its own sweet time to be uncovered, the markets have the dharma of questioning the pretense policymaker and regulators. Whether raising rates too far, too quick, providing to the financial market antagonistic in their quest for the market sustainability. Against the vagaries of US banking system, it is important to use the example of India's as admired to the developed world that has been often championed as the epitome of stability. India banks are sound and largely protected from global vagaries given the very nature of regulation by RBI. For example, money markets here are shielded from global spillovers by statutory liquidity ratio, which is SLR requirements, allowing banks to have access to central bank liquidity and secured markets, thus obviating collateral constraint. Also, banks in India largely find themselves through retail deposits rather than wholesale funding, which has been often being identified as source of vulnerability to external contagion in other countries. The collaborative approach that has been often followed by RBI protects the interest of Indian banking system. For example, in 2020, just before the onset of pandemic, RBI adopted a way of averting a crisis with key bank from the broader markets partnering for bailout in case depositors suffer. The same happened in 2008. The global financial crisis underscored the importance of having a robust deposit insurance system, which is DIS, for the global banking system. A 2014 IMF paper estimated that nearly 112 countries, 59% of 189 countries, had a DIS, though it was less widespread among low income countries.